Hello traders, you're welcome to this video. In this particular video, we are going to be looking at a trading technique that many traders overlook, and this technique is the box spread strategy. Now, this method is a game changer for those looking to minimize risk. However, please note that this strategy does not guarantee profit, okay? Even though it can be an effective strategy for those who are trying to minimize their risk, it doesn't mean that profit is guaranteed, okay? Please note that no strategy is foolproof, okay? No strategy at all out there is foolproof. So that is the reason why it's very important to always observe proper risk management, because profit is not guaranteed. Okay, so if you are ready to unlock the secret to effective trading, you might want to stick around as we dive into this important strategy known as the box spread strategy. So what exactly is the box spread strategy? In simple terms, it's an options trading strategy that involves executing both long and short positions simultaneously. Okay, now this creates a box or range, allowing you to capitalize on price discrepancies without exposing yourself to excessive risk. Okay, so basically this strategy is one that tries to minimize risk. That is the reason why I said that it can be really effective for those who are looking to minimize their risk. Okay, it's a the strategy that tries to minimize risk, and the beauty of this strategy is that it lies in its ability to lock in gains while protecting you from market volatility. So essentially, you are constructing a position that can profit regardless of which way the market moves, up or down. Now, let's get into how to set up a box spread. Okay. Now, the first thing you ought to do is to choose your options. Now, this strategy is mostly used for options trading. Okay, it's mostly used for options trading. So, first, you can select the asset that you want to trade. It could be a stock, or an ETF or an index. Okay. So in this video, let us just use the US 100 index. Okay. Let's use the USA 100 index for this video. All right. Okay, so after selecting the assets that you want to trade, let me just write this here again. So after selecting the asset that you want to trade, in this example, I'm using the USA 100 index. The next thing for you to do is you'll need to find two strike prices, one for the long position and one for the short position. Okay, now because this strategy aims to minimize risk, that's the reason why you are going to be opening both long and short positions. Okay, so now you will now have to execute the trades. Next, you'll create your box by executing 4 trades: buy a call option, sell a call option, buy a put option, and sell a put option, all with the same expiration date. Okay, remember that this strategy is for options trading. Okay, so I'm not going to be executing any real-time trades here. I'm just going to be explaining what the strategy is about. Okay, so first thing is to identify the options that you want to trade, or the asset that you want to trade. You identify it first. Then the next thing is you find two strike prices, one for the long position and one for the short position. And then after that, you create your box by executing 4 trades. Okay, the 4 trades include a buy a call option, sell a call option, buy a put option, and sell a put option. Okay, now because this is the MetaTrader 4 platform, so I don't really have that those options of buy a call or sell a call and buy a put and sell a put on the MetaTrader 4 platform. So instead, I'm just going to be writing the the these points that you need to watch out for. Okay, so this is the first this is the first trade that you would want to execute, the buy a call option, and the second will be sell a call option. Right, then the next will be buy a put option. All right, and then finally sell a put option. All right, these are the 4 trades you want to execute, all with the same expiration date. Now, after executing your trade, you monitor your position closely. The key here is to manage your risk and decide when to close your box spread for a profit or loss. Okay, now let's talk about the advantages of using the box spread strategy. First and foremost, it minimizes risk. By having both long and short positions, you are insulated from large price movements in either direction. Now, this makes it a great choice for uncertain markets. Okay, imagine you have both a long position and a short position open at the same time. It's going to insulate you from sudden price movements from either direction, or in either direction rather. All right, now additionally, the box spread can also serve as an excellent way to take advantage of arbitrage opportunities. Okay, you know what arbitrage trading is? That is involving you to try to take advantage of price differences, right? Price differences. Okay, so when the options market misprices the box, you can step in and profit from the price discrepancy, basically. All right, however, like any trading strategy, the box spread isn't without its pitfalls. One common mistake is failing to account for transaction costs. Since this strategy involves multiple trades, the commissions can add up quickly. Okay, so that's one thing to note. All right, always ensure that the potential profit outweighs this cost. Okay, now another pitfall is not monitoring your position closely enough. Market conditions can change rapidly, and it's crucial to keep an eye on your box spread to react accordingly. Okay, so these are things to know, these are points to know, very, very important. Okay, so if you are a fan of options trading, then you might want to try out this box spread strategy. Okay, if you're a fan of options trading, right? So there you have it, the box spread strategy in a nutshell. This options trading technique can provide you with a safer way to navigate the markets and can be a valuable addition to your trading toolbox. If you found this video helpful, please give it a thumbs up and hit that subscribe button. The support helps us continue to create valuable content just for you. Thanks for watching, and until next time, happy trading.